What's good, family? Dub Washington here for another special episode. And today I want to come to you to bring you the importance of true comparables that you must understand to secure anywhere from $50 to $150,000 in 2026. Now, as I always tell you, family, I'm taking a different approach, allowing you to look at credit from a different lens. So some of the things I'm going to be breaking down may be contrary to popular belief, or it may go against what you have been previously taught from another mentor. And I always say this: I am not here to disregard other information that you may hear, but I am here to give you a different lens and a different perspective to look at credit from. So, in today's video, we're going to be having I would call it an overhaul masterclass, to where I want to challenge your thinking or expand on new information that you may have may not heard. So one of the most important things that you must understand pertaining to credit in 2026 is deposits, right? And deposits going into your checking account, whether it is cash deposits, whether it's ACHs, it doesn't matter the type of deposit. The goal is to have continued increased consistent deposits. Entrepreneurs, business owners, anybody that is struggling with access to maximum exposure with your personal credit cards, business credit cards, structuring your LLC or corporation. It's a multitude of things that you are missing out on, stopping you from getting access to your first $100,000 at 0%. And what I want to do is coach you to your first 100,000 or your first million. No matter where you're at, you're going to get value from my $99 community, where we break down everything from personal credit mastery, business credit mastery, travel hacking mastery, manufacturer spending mastery. Nothing is left off the table in this community. Listen, for only $99 a month, you can come and sit down with me and hundreds of other entrepreneurs and business owners and ask me rapid fire Q&A. How much would that be worth to sit down with a multi-seven-figure business owner to answer your questions? Most people say it's worth thousands, but I want to grant you access for only $99 a month, and you can cancel anytime with no pushback. I'll see you on the inside, and in my words, everybody eats. Let's go. Cash deposits, whether it's ACHs, it doesn't matter the type of deposit. The goal is to have continued increased consistent deposits over a longer time frame to look better in the banker's eyes, right? Now, you must know what the banks are looking for. We have often heard that we have to understand our Vantage score, and we look at Credit Karma and we think that we have a high credit score. Banks don't lend off of a Vantage score, they lend off of a FICO score. And inside of that FICO score is multiple different versions. And if you have not checked out my FICO masterclass, the link will be in the descriptions. Definitely go and check that out. It is mind-blowing the amount of information that you don't know that's stopping you from getting your first 100 to 150,000. Understanding the difference between Vantage and FICO score is the first and most important factor for the common person trying to scale to these larger amounts. Next up, you must understand the difference between the score versus the report. Profile, or the report, is actually the transcript in which it's going to have an in-depth detail of the quality of classes that you took. And in the credit world is the quality of accounts that you have. I'd much rather you build with quality comparables. I don't care if the limit is lower, but it's quality. So don't try to go for a high limit credit cards or high limit product that's not a true comparable solely based on the limit. So do not get caught up in the score versus the report. This is the primary reason why you guys are here. And I'm going to break down not only how to get it, but the important factors that you must understand to obtain the elevated credit score to secure maximum funding. Comparables, as I previously stated, is the most important. What are the type of comparables? And whenever I say comparables, I am referring to the accounts, the primaries, not secondary accounts, but the primary accounts on your profile. What does your comparables or your primary account say about you? Does it say that you are in the phase of rebuilding? Does it say that you have established credit? Does it show that you're a responsible borrower? Like, what does it say about you in 2026? Next up, I want to break down why you don't get credit builders on your profile. because whenever you are in the process of rebuilding, that's one of the first things that people will tell you. Add credit builders to your profile, and then from there you can get access to high limit funding. But so what I'm saying is the banks don't lend off of the high score, they lend more off of the quality of the accounts or the comparables. So I much rather you go out and build with certificate pledge loan before you try to go out and obtain any type of funding, right? It looks better on paper. And once again, the underwriters and the bankers are judging you from the quality of accounts. Next up, we have application sequences. Now, this is very important that you understand what bank you're trying to go to and what time frame in your sequence. You can go to the wrong bank at the right time and not get approved simply because you went to the wrong bank. Yes, your credit score is high, but if you have a lot of inquiries on that, they haven't fell off. You added too many new accounts over the past, 9 to 12 months. It's a certain set of rules that each bank may have or each credit union may have that tells you whether they're inquiry sensitive, new account sensitive, recent spike in utilization, so on and so forth. So you understanding what bank to go to and what time frame and in what order is very important that you must leverage in 2026. Now, with all of that being said, I want everybody to also understand application rules. Application rules are a set of, I would call them, they're not written in place, but they are commonly discussed in the credit industry. And whenever you have a multitude of people to go through and apply, and they have certain data points that can be comparable to one another, you kind of gather data points to know what banks like what and what banks don't like. So the moral of the story is understanding your application rules is very important during the sequence because, once again, if you know that you can stack credit cards, which is going to get 2 or 3 credit cards, they only pull your credit one time. If you know that you can stack credit cards, what ends up happening is you're going to prioritize those particular set of banks or credit unions that allow you to do it because you're getting multiple products, whether that be a personal loan, a personal line of credit, and a personal credit card, and they only pulling your credit one time. So why wouldn't you want to leverage these multi-dip and double dip banks? Understanding that is very key. Also, the timing in between the applications. So can you go and apply for, 2 or 3 products? They only pull your credit one time based on the time frame. So Bank of America's rule that we always talk about is the Bank of America 234 rule. You can't get more than 2 credit cards every 60 days, 3 credit cards every 12 months, and 4 credit cards every 24 months. So with you understanding the application rules, you know up to what amount of products and or cards that you can apply for to get the maximum exposure. Now, once we understand these application rules, really understand the geo restrictions because just because you hear about an institution, whether it be a bank or credit union, if you are not within a geo specific location or you don't fall within a certain radius, that bank may or may not want to lend to you. So, for example, Cadence Bank, if you are not within a 60-mile radius of them, they don't want to do business with you. You will have to file a foreign entity or get an actual mailing address to get access to those products. So you can know the application rules. You can know where it falls at within your funding sequence. But if you can't get access to the particular bank or credit union, what ends up happening is you're essentially building with a checking account that you can't truly leverage. And that will be a waste of time. Now, as we transition into more of a deeper level, these are a set of questions that you should be asking whenever you walk into the bank to ensure that this is the correct business partner, because banks is nothing more than your business partner. First and foremost is what bureau do you primarily lend off of? So are you going to pull TransUnion? Are you going to pull Experian? Are you going to pull Equifax? Or do you pull multiple bureaus, right? In which we should never get a credit card that's going to pull from multiple bureaus, as we know that certain institutions with a double dip and multi dip, you can go and get one inquiry and get access to multiple products. So why would you go to an institution that's going to pull 2 to 3 bureaus and only give you access to one product? It just doesn't make sense to waste an inquiry for that least amount of product. Now, us understanding what bureau they pull from, we now understand like what's the required score. And don't get caught up in the score pertaining to the individual bureau. Focus on the actual FICO bank card score, FICO auto loan score, what's your mortgage score, because each product that you apply for will essentially pull a version of your FICO score, not the bureau. So they may pull your Experian FICO bank card score 8. And us understanding what bureau they pull along with what FICO they pull, it essentially lets us know we can leverage access to this information because we know that they're going to pull from this bureau and whether it's strong or not. Now, what FICO is used? I previously spoke on that. Understanding which FICO score they're going to use, not just the bureau. So pay attention to that as well. Now, what is the max limit for this particular product? We don't go in and celebrate a $10,000 approval whenever the max limit on this credit card could be $50,000. We want the max exposure, and that's why we're asking these particular set of questions to understand where we're going to be approved for, or to understand about how much to expect at the particular institution. Now, it's a difference between max product exposure and overall max exposure. Max exposure total is how much that institution can lend to you per social security number or EIN number, while the max product exposure is how much you can get on that individual product. So understanding the difference between those two is very important. And each bank, they don't have like a written set of rules, but if you talk to the right relationship manager, or if you are building with the right network of relationship managers, you can get access to the same exact information. Now, what are the business age requirements? I know some of us are real estate investors and you need access to quick liquidity. So whenever you're going in for a business line of credit, they typically will have a business age requirement and typically a personal credit score requirement. And most often you're going to hear a 720 plus FICO score, and you're going to need at least 2 years in business for a lot of the larger lines over 50 to 75,000. So you understanding what is the business's age, because if you don't have a 2-year-old business and you try to go for a product that requires that, it's a waste of your time to build out with that institution. And also understand that each institution will have a different set of rules. Now, real quick before we dive further, I want to give you access to my $99 school community where we talk about everything from personal credit, business credit, travel hacking, liquidation of credit cards, whatever financial literacy topic you could think of. We break it down in a group, and I want to grant you access for under $100 a month. Now, if that's you, the link will be in the description, and I look forward to building with you. And in my words, everybody eats. Let's go. Now, as we jump back into understanding the FAQs for these relationship managers to secure your first anywhere from 50 to 150,000, you must understand you can know the max exposure, you can know the max product exposure, but if your business is not in position to get a UCC1 filing, you shouldn't be going for the max exposure. So sometimes exceeding over 200,000 or 300,000 from an institution will require them to file a UCC1 on your business. And in the case of a UCC1 on your business, they are now literally placing collateral on assets. As a result of the collateralization or the collateral on the assets, what now happens is other institutions are they're very weary of lending to you, because in the instance of default, somebody already has first dibs on the asset. So what are you bringing to the table? So keep in mind, you going for max exposure may require a UCC1 filing in which you get access to the 250,000. But if that stops you from getting access to an additional 500,000, it wouldn't make sense. So just understand where you are at in your business to pretty much make the best financial decisions for you. Now, what documents will require, or what products will require documentation? We typically try to go to stated income, projected revenue banks, to where we can basically give projection of what our business is going to make to get maximum funding. Because let's be honest, most of the entrepreneurs and business owners don't have access to true documentation. They don't have 1-year tax returns, and they don't have, up to 2 years tax returns, or even worse than that, they are in no way positioned to get a 4506T, which that's the bank or the lender reaching out to the IRS to get your tax transcripts. Now, most of us are not in that position. And then if we were to allow them to do this, it wouldn't correlate, or the numbers wouldn't match up, for lack of better words. Now, what documents are required? Us understanding that allows us to position ourselves, or position our sequencing with the banks, to know what bureaus or know what banks we're going to go to. Because if you don't have the 3 to 6 months bank statements, the 1-year tax returns, don't waste your time going to them because you don't have the requirements for this particular financial product. Now, what are your credit limit increase rules, right? Because if you don't get the initial limit that you want whenever you first start, you're not going to close the card down. You're going to accept it and continue to build it. But if you don't know when and how often to apply for credit limit increases, what ends up happening is you miss out on access to more capital. You miss out on more availability of credit. So knowing every 3 months you can go in and apply for a credit limit increase, every 6 months. This is valuable information to get, like I say, closer to that max product exposure. Now, from the credit limit increase rules, who is the underwriter of this product? A lot of us are going out building with different bank names or different credit union names, and it's essentially the same exact issuer of the financial product. So if you go to Renaissance Bank, if you go to LGE Community Credit Union, if you go to, the local credit union up the block from you, right? And they all have their products underwritten and issued by Eline Financial. Yes, you went to 3 different credit unions, but essentially you went to the same exact issuer. So since they're the issuer of the credit cards, what ends up happening is you get a underwriter exposure. So once you get to, 30 to 40,000 or, 2 to 3 products with a particular underwriter, you're now capped at the maximum exposure for that particular underwriter. So you understanding who the underwriter is very important. So as we move on, what are the underwriter rules, right? We talked about underwriter exposure, which ties directly into the underwriter rules. Hey, can I not exceed 4 financial products with the issuer of this product, right? So it's a multitude of things that we got to take into consideration. Now, what NAICS code do they deem as high risk? I previously spoke on this. The NAICS code revenues change on a year-by-year basis. And if the financial institution, whether it's a bank or credit union, has lended out money to a business that's operating under your NAICS code, and that's their highest defaulted NAICS over the past year, it's not that you're in a high risk industry. It's just that based on their lending exposure, you have too much risk associated with your NAICS. So you could have a very well built out structure with your LLC or corporation, but if the NAICS code has defaulted, especially over the past 6 to 12 months on a lot of the financial products issued to them, it's going to be harder for you to get access to capital as well. So you understanding the underwriter percentage, what is the underwriter exposure? All of this ties into you understanding what questions to ask whenever you walk into these financial institutions. Now, what is the tolerance for a foreign entity filing? Because once again, I talked about the geo-specific banks and credit unions. If you don't stay within a 60-mile radius, you can't access this particular, bank or credit union. But what about the foreign entity filings that a lot of people tell us to get online, where they're telling you to, let's go in, file to operate in this particular state or city, and so we can get access to this particular bank to get access to more additional funding or maximum funding. Well, they got to have a foreign entity filing tolerance. If they don't like foreign entity filings, then they're not going to issue you credit based on that alone. So if you go to certain institutions and people that filed the foreign entity to operate in that particular city and or state defaulted a lot, they may have a tighter risk or they may have a tighter risk exposure to foreign entity filing. So you must ask all of these questions that I know nobody else is telling you. All right, as we close out, what area do they lend the most to? Is it a specific state and or zip code that has been performing lately and paying back their credit cards, paying back debt that was owed, right? In the form of deposits. Like, what is the most flourishing branch in that particular state? Because if you know what zip code is putting the most deposits into a financial institution, this is also other information that could potentially be leveraged for your benefit. So the next question is understanding what's the reallocation rules. If an institution has more than 2 financial products, what you can now do is take the limit from one and reallocate it over to additional card, combining those 2 limits. So it's a multitude of questions and strategies and techniques that we leverage in 2026 to get access to the bag. Now, last but not least, I always want to extend you an opportunity to come and sit down and eat with me and the family as I say that everybody eats. I have a lifetime mentorship that you can currently join right now. Lifetime mentorship, one-time fee. You get to meet with me on bi-weekly live calls, open fire Q&A, pre-recorded modules. We have different coaches and speakers coming in for mindset, personal development, extra stream of income calls, a multitude of things, over 60 plus modules in that. But if that's not for you, I also have a lower tier to where you can come and sit down with me once a month, open fire Q&A for only $99. For less than $100 a month, you can sit down and ask me as many questions as you want to help you scale and grow your personal brands and or businesses. Now, I wish I had that whenever I first started my entrepreneurial journey. Most of the calls were pre-recorded, or we were only able to get access to the mentor in a group setting, right? So if you want to grow and scale your businesses in 2026, I look forward to building with you much further. And in my words, everybody eats. I'm out.